Yeah, professional sports, a real nail biter happening right now is in Congress. It's happening between Congress and the president as we wait as to whether or not they're going to raise the debt ceiling. And meanwhile, markets have been roiled by this. So, and plus, what's worse for crypto, more regulatory concerns. Anyway, let's find out what it all means. Joining us now to discuss the crypto markets is Wave Digital Assets head of Protocol and Treasury Management, Nauman Sheikh. Welcome back, Nauman.
Good to be back.
Glad to see you. So, of course, yesterday, Treasury Secretary Janet Yellen said that the U.S. could run out of money within days or weeks if Congress doesn't deal with the debt ceiling quickly. That's driving markets a little bit into a frenzy. So what does this current macro environment mean for crypto?
Yeah, I mean, look, I know what Janet Yellen said. There's a lot of posturing going on right now. It's a political dance around the whole issue. Elections are around the corner in 24. So each side has its own sort of sound bites that they want to get across. Most likely what's going to happen on the debt ceiling issue is it's going to be a game time decision. And we'll most likely get over it. The markets have been volatile around this, but they've largely been just shrugging it off because I think, generally speaking, they think it's going to get resolved like it always does. My worry is, we play out, market plays out like it did in 2011, where, the resolution at the last minute, but we get a downgrade. We're at AAA right now. If you remember in 2011, we're downgraded to AA plus. The markets were roiled by that, and it took a few months to recover. So that's the risk that I see. But let's see how it plays out. Some people are saying June 1st is the deadline, but a lot of the banks on Wall Street are saying it's really June 8th. So it could just drag on for a bit, and it's a lot of posturing.
Although, in all fairness, when the U.S. got downgraded 10 years ago, 11 years ago, it didn't have as much debt as it does now. It has more debt now, so there's more problems to pay. You would have a higher interest rate potentially on even more debt. So that makes things really interesting, and the stakes might be higher as a percentage of GDP with a downgrade. I kind of want to switch the topic a little bit. I'm looking at also Bitcoin, particularly as a risk asset, because this is something that for a while was the narrative in the market. And I kind of want to post there's a chart we have here from K33 Research. It shows, and I'm not a fan of 30-day correlations because mathematically it's not a great idea. 90 days better. If you're doing portfolio, if you're trying to balance your portfolio. But nonetheless, here we have it. This is a correlation between the Bitcoin against NASDAQ and the S&P 500. They go together. They tend to go together. And of course, the correlations are going to go together against Bitcoin. Here we're at, it looks like we're at lows for, I guess, since December 2021. What does that mean overall as this narrative of Bitcoin as a risk-on asset seems to be, I don't know, I don't want to say going away, but clearly it's not correlating with equities. What do you make of that? What's the market narrative now?
Yeah, I think you need more data over a more sustained period of time to really make a sound judgment on this. But think about it. The banking crisis did a lot of good for Bitcoin, right? That was a major catalyst for decoupling. And the whole narrative around a further crisis in the sector due to commercial real estate or even a debt default with the debt ceiling issue could be very positive for Bitcoin, just as a safe haven, as a store of value, what it was meant to do. So in that sense, if that's sustained low correlation, then there's something to say about that. But macro factors can override this, and that's a strong possibility that it will. We have potential further rate hikes coming up in June. It's economic data is still strong, so it could all recouple at some point again. But I think if there's a crisis, then that's definitely a reason for liquidity flow back into Bitcoin.
Do you think that? I kind of want to ask about this whole thing about the flow to the run to Bitcoin on the heels of the banking crisis. Do you think that was kind of people looking at it as a result of it, and not just something that happened in the market anyway? In other words, there were other factors that might have been involved as to why Bitcoin had that run up at the same time as the banking crisis. It might not have been the safe haven play so much as just a concern about a very specific two banks and their systems that they were running, Signet, for instance, that
Sure.
led to this.
Sure. I mean, there are dozens of reasons why this could have happened, but the important bit is that it did happen, and it has created a narrative around it. That's how it all starts, right? You need a crisis for this for a narrative to start building, and then you need time for it to sustain that narrative. And I think whatever reason it was, whether it was a crypto-specific bank, the fact of the matter is that people start talking about it, and that's what it's really all about.
Nauman, thank you for joining us this morning. That was Wave Digital Assets Head of Protocol and Treasury Management, Nauman Sheikh.